This video update comes after a long gap. I was waiting for the right moment to actually take this call because I wanted to get to a point where we could look at a good probability of the move being complete. I think in January it looked like what I was calling wave Z of a bear market rally is complete. But after that 5-wave decline, we've seen the market rally higher and higher without making a reversal. And accordingly, I made those changes in the accounts. Now, for the last 10 days, we've been seeing one by one each sector losing momentum from autos to banks. And we're probably in the last legs of IT. I think technology should be the final culmination of the power of what this bullish rally has generated. It's amazing because we saw yesterday that the Nifty actually today made a new 52-week high in the presence of its worst forward earnings guidance. I think ever since it has been growing prior to 2000 at the rate of 100%, and it slowed down to 40% and 30%, 20% in the mid to late 2000s, and now it's giving guidance which are less than 10%. So in that scenario, if you just look at the value wave model which I put on the website, it tells you exactly that you're at the end of the fifth as far as the technology and Infosys is concerned, which is really not a nice place to be in. And that's a long-term picture, that you're at the end of some kind of euphoria in a sector which is completely degrowing and losing momentum. But that's not what I wanted to really discuss here. The point is, after today's fall in the market, the loss of momentum is now getting pretty widely spread, and we are going to test whether the Z wave is complete. The wave counts I mailed over the last 1 week show that I can count it as complete, and therefore I think this is a high probability move on the downside. Those who still don't think so would look for a confirmation near the 40-day average, because if this is only wave A of Z and this correction is just B and C up is still going to continue, which means the index goes to 20,000. In that case, the 40-day average typically would not break, which is at around 17,320 odd. The exact number I've put out in today's mail in the evening. So if that level holds out, then only we would probably have the potential of a wave C pending on the upside for higher levels. Otherwise, I think Z is complete. That level breaks, we will probably test the 20-week average, which is close to 17,000, and then probably test the February lows, which was closer to 15,300, and head lower into a larger corrective phase. So I think we are at the beginning of that trend now, as small caps also have started giving up today, which were the main cause for the strong breadth that we saw in most of the last 6-7 trading sessions. So watch out for these levels, because as we move past them, it will swiftly keep breaking into new lower territory, and if you're not prepared for the move, then you will probably miss out on the potential downside, or probably be stuck on the wrong side of the market. So watch out for these levels and move accordingly. My bet is that if Z is complete, and I think probably it is, then we're heading to much lower levels from here in the coming days to weeks. The weekly closing tomorrow should probably provide us with some more evidence on that front. And as long as we are below 18,300, I think there would be no change in wave count, because I discussed last week in my interviews that it's time to take the big call. It's either, if you're bullish, it's probably you would have to count it 1, 2, 3, 4, 5, and then look for targets like 35,000 on the Sensex. But if you're bearish, then you'd count it as a corrective and look for the downside, which could be 12,500. So this is right now, as long as you're below 18,300, the bearish wave count still holds. The counter type wave cycle, which I discussed in Jan, nothing has really changed. And we are right now on the sell side of various short-term momentum indicators and key levels to watch out for in the coming days. That's it from me today. Thanks and bye.